Well, good morning. It's another Saturday here. Before I get into this, if you would be so kind as to let me know if the audio is coming through cleanly. Can you guys hear me? Is the volume good? I'm checking Twitter for your response, by the way. Thank you, Kalo. Thank you, Margin Gold. Thank you. All right, so here we are on the cusp of a new journey. This coming week, you'll be sitting in the presence of hopefully much more educational medium using my content and my experience. And I want to kind of like give you a little bit more details as to what to expect. So that way we know what we're doing. Also kind of describe the difference between traditional technical analysis versus what you're going to see. Hopefully you've seen in the past month, I've been with you every day, calling specific things and price action. And at the risk of sounding braggadocious, I'm not trying to be. I just want you to think about how many times I've mentioned something in price action real time before the fact and how price delivered after that. And some of you have followed those reference points real time and taken trades. I'm going to say this again, and you'll hear me say it every single time we do a live session. Please don't do that. You don't know where I'm going to be going with the lesson. You have no idea if it's going to be something that's going to be meant for you to struggle with, and or if it's a low resistance liquidity run. You don't know that. And that's the first month. Okay, I'm going to put you in front of the charts with me, and I'm going to have you observe specific things. The reason why I'm doing it that way is because my son literally will be sitting right next to me. Sometimes I'll make him grunt. That way you know somebody else next to me, not just simply me talking to myself. Because I want him to understand, much like a neophyte would, how do you go in? How do you back test? How do you study? How do you look at price action on the days that ICT is not doing his live sessions? How do I get the maximum growth out of not pushing a demo account, not pushing an entry button? Okay, not going with a live account because that's the best way to learn when it's not the best way to learn. It's the worst thing you can do. In my opinion, and my experience as an educator as well, it's been my observation that those individuals that start trading with money, whether it be the most insignificant amount of money versus not learning how to worry about the outcome in terms of monetary reward or pain, loss. The ones that do it without money tend to be quicker to profitability, more long-term, consistently profitable, and they're not plagued with the problems that even myself as a trader, I still have impulses. When I see certain moves, I know that the 20-year-old ICT wants to go in there and go 30% of equity on that one trade, just to say, I killed you, I slayed you. You had no answer for me coming in and taking it and plundering you. That's a thing that comes up many times throughout the week when I see a setup that is absolutely easy. And I'll show you what easy looks like. And that's the whole point of why I'm doing it this year, because I want you to focus on those conditions. Because technical analysis leads us as new traders, new developing speculators in the marketplace. We are invited many times to do things because there's lots of ways, different roadmaps and routes to get to a winning outcome. And it's not limited to my stuff, okay? Anything that's a catalyst that makes a decision, whether it be a random number generator, flipping a coin, last time your elbow hurt, the price of cattle went up. There's traders that do that kind of stuff. And as long as they manage the money, you could potentially, in theory, be profitable, but the outcome isn't really linked to what you believe the catalyst was for you to get into the trade. I want you to think about that throughout the year. So every time we're doing our live sessions, I want you to at the end of it, right when we're done. Don't postpone it. I'll do it when I get more time. At that moment, I want you to record in your journal what your observations were, what things that you felt while price action was being delivered, and where I'm commenting and where I'm placing your attention. And I want you to focus on doing that without having any real negative reflections. So while I don't sugarcoat the realities of trading and what you're going to have to go through, in your journal, you absolutely are sugarcoating it, because you want this book that you're writing in your own words, in your own observations, your personal experience. This year, each of you that take on this endeavor every single week with me, if you journal it, you're going to have the best trading book there's ever been, because it's going to be uniquely linked to the way you think. It's going to be uniquely associated with your personal experience that no one can download and transfer to you. You saw it. You were there. You watched it happen. The good, the bad. When it was on point, it was precision like you could have never imagined. And times when you thought it was going to be precise, and maybe I thought it was going to be precise, it doesn't deliver as we expected. You're going to have all those experiences. And that's something that you're going to encapsulate. That a book written by someone else and the things that they picked as salient for the book, you're going to have the real deal. Like this is the trading book that all of you would want to buy, but you're never going to find it on the bookshelf. Now I'm going to write 4 books, but those books still will pale in comparison to the book that you're going to create and write in your own journal this year. And I mean that wholeheartedly. You have no idea the benefit of doing it this way until after it's done. And when the year closes and we break for the December month, it's the second Friday of November is when we're going to stop the live sessions. That way, some people were asking, how long am I going to go? I'm sticking to my schedule. Second Friday of November, that will be it. So we won't be doing any more live sessions after that, but it'll be two per week. So I want you to know that it's exciting what we're about to do. It's exciting not only for many of you, but I'm excited because I know what you're about to experience. And I feel like a kid on Christmas Eve. Like I literally feel like a kid at Christmas Eve, still believing in Santa Claus. And the excitement of, I'm going to get presents. What am I going to get? Nothing bad's going to come, right? So that's how I feel. I feel that excitement for all of you, because many of you are plundering around through confusion. You don't know what you're doing, what you're looking for. There's a lot of videos on my channel. The easiest way for you to know where to go and where to study is when I'm literally doing the live sessions. Because when I'm referring to something, I'll refer to where I talked about these types of things. So that way you can go back and look into, in between the next live session, let me go and delve into what he said there. And that way I can get a better understanding. It'll help you fill in the gaps that I won't be able to do on a minute by minute candlestick analysis, reading it real time with you. My focus is going to be limited to what it is that's occurring in the chart at that time. I'm not going to be covering, Forex and everything else. I will be doing daily reviews in the evening time. So I'll give you my analysis on Forex, and I'll give you my analysis on the macroeconomic front, what the markets should be doing collectively. And I'll try to keep them relatively short. But if you're going to require me to cover all those markets, you're going to expect at least a 20-minute video at the minimum, okay? Because we're doing analysis. Analysis can't be dollar menu approach. You can't just do drive-through menu analysis and expect to get really good results. So the discussion this morning is the market analysis versus technical science. The topic came to me last night before I laid down, and I wanted you to think about what it is that you know and what it is that you believe about the markets right now? What analysis concepts, what traditional approaches have you adopted, used, discarded? I can look back and tell you that I've gone through a lot of different approaches and placed a great deal of emphasis on things that had really no bearing on who I am as a trader today. Just about every mentor I had has their fingerprints on me as the trader, but very few elements really bleed into the actual things that I do trading. So I'm thankful for the mentors that I've had, but none of them taught me how to trade like I trade. They gave me the little bump, the little nudge of, focus over here, look at this over here. And it got my attention, like Linda Raschke, the whole idea of stop hunts, which, I just thought this is what happens when you're wrong. When you put your stop loss in the wrong place, it gets hit. And then because of the approaches that she taught with her book with Larry Connors, that whole premise was how I built the confidence of going in, selling short a run above old highs or buying below old lows. And that was my version of turtle soup. It's not the same as her book titled Concept Turtle Soup, or not even Turtle Soup Plus One. It is a good book. I think you should have it. Every trader should have it. There's a lot of things in that book that I don't subscribe to, but it helped me. It helped me understand a concept about trading that was alien to me. And I know some of you have those things about my content. Most of you, at some point or another, look at all of that material on my YouTube channel, and you think, wow, where do I begin? What do I do with all this? I just want to learn how to make money. Can he just tell me in 5 minutes how to do that? I can't do that in 5 minutes, but I want you to focus on how I'm doing it literally over my shoulder when we do our live streams. Think about what I'm not, and not while I'm doing it, afterwards. These are all the things that you're going to record in your journal. You're going to note how little that you need to focus on to find a setup that will yield potential points or pips if you're a Forex trader. Everything that I'm going to be teaching over the medium of the E-mini S&P is absolutely applicable to stocks. It's applicable to Forex. It's applicable to cash markets if you're not in the futures market. I've been wrestling with the idea of how I know a lot of you don't have access to the futures markets, and you like to trade the US 30 instead of the Dow futures, or the US 100 cash market instead of the NASDAQ futures, and the US 500 versus the S&P E-mini. I've thought about how I was going to do that. So I think what will have to happen is I'll have to create a layout. So that way when I'm observing things in ES, and when I interchangeably go back to the NQ chart, so that way you can see and compare and contrast. You'll see also on my chart how I'm plotting and posting the SMT. I've seen a couple of people ask, how do you put that on there? I'll show you. I'll walk you through it that we can see what it is I'm doing, how I dress my charts up, so that we can do everything that you see me doing with my charts. You're seeing one template of the 8 monitors that I have. Now, don't think, because I said 8 monitors, there's 8 in front of me, okay? I have supporting monitors to the side of me, but they're not important. The ones that I'm actually working with, they're making the decisions on what it is I'm following, what I'm focusing on, they're right in front of me. And you only need the template I'm going to show you. If you can't have the template where it has the 3 charts on one screen, you can toggle through just by changing the time frame. Don't think that you have to have it exactly like I'm saying. But a lot of you ask for this, so I'm showing you. It is not the secret to it. It's whatever you're comfortable with. If I had 8 screens on my desk in front of me, don't equate that my experience or my success in being able to do this is attributed to because I have 8 monitors. Because I can literally be walking around. I tell you not to trade on your phone, but because I know what I'm looking for, I could trade on my phone. But that's not an invitation for you to say, well, ICT said he can do it, so therefore I am his student. I should be expected to do the same thing. That's not true. I'm not saying that. But I'm saying to combat the idea that you have to have all of this real estate in front of you in terms of monitors. You don't. So don't let that be an impediment to you or a point of contention for, oh, well, I have to have extra things I can't afford. And that's the perfect excuse why I'm going to fail. No, one laptop. When I'm doing all of my video work and I'm recording, I'm using a laptop. When I'm talking to you, well, I'm not talking to you now with a laptop, but if I'm doing live streams, I'm going to be on a laptop, one single laptop. But I have a layout that I'm constantly going to be referring to. And you'll see exactly what I mean by that. Most of all the things that you're worrying about or have worried about when trying to learn from me or watching videos and such, you're going to see how all of that was just needless anxiety. You're trying to make everything applicable to every condition in the marketplace on any given time frame when it's not necessary. Much like it was when I first learned technical analysis, the traditional approach to technical analysis. I wanted to apply everything. Every trade had to refer to commitment of traders. Every trade had to have at least 3 moving averages. It had to have 2 oscillators, because one oscillator might be lying, so I have to confirm it with another oscillator. And if they agreed and there was a divergence there, then and only then the trade was really good because I had 2 witnesses behind the idea, right? So more isn't better. It's not. And my charts only get bloated when I'm annotating levels for you to observe. And it's going to be very hard for me to do what it is I usually do with price action. And like I'm going to have to force myself to annotate much more on a chart than I normally would. So that way you can see it. So if you're wondering what I mean by that, just basically think about what I'm doing with the chart when I'm recording it and I'm doing the execution. Like I have to force myself to do that. I don't do that when I'm trading. It's usually just a naked chart. I'm looking for price at a specific time to do certain things, and I'm looking for periods where I can pyramid when it's necessary. So it's going to be a growing thing for me, doing this live with you, so that way I can listen to your feedback and try to be, at least in this part of the feedback, at least try to be a little bit more sensitive than you normally would, because I'm easily offended when I see other people show no consideration for the fact that I'm doing this for free when I don't need to do it at all. So I'm looking for constructive criticism. I may not take your criticism under advisement and even implement it or use it. I won't be rude and snap back at you, but I may use it in the live streams going forward if it's useful. If it's something I know I can accommodate, I'm absolutely willing to do that. But I'm not going to be doing, have it your way. Can you pull up gold? Can you pull up crude oil? We're not doing that, okay? We're focusing primarily on the S&P because you only need one market. And whatever you see me doing this entire year, if you're a euro dollar trader, okay, or you are a dollar CAD trader, whatever the Forex market that you trade, it's applicable. Everything runs on this same algorithm. That's what you're going to discover. I wasn't supposed to say that. I said the other day, we're not going to talk about algorithms anymore. The characteristics tend to repeat themselves across major markets. I think that's a nice ambiguous way of saying it without causing any people that don't believe there's an algorithm to get all upset. But technical analysis, when we look at the marketplace and what I'm going to be training you to do, if you're already profitable, some of the things that you'll see me do might resonate with you because you have a lot more experience and you know what you're looking for in terms of price action. You might be bullish when I am expecting higher prices, and you may not see these entry points that I'm going to refer to as price paints. In the beginning, it'll feel like, I don't understand what he's doing that for. But when it's day after day of it doing it, week after week, and then month after month, and you look back over the course of the entire year, you're going to see, wow, wow, yeah, well, I can really see that. I can really see that happening. And there's nothing except for the open, high, low, and close on the chart. The only things I'm putting on there is to highlight what it is that you should see specifically in this specific area, what my attention is focused on, and only in that. So don't look at anything else on the chart outside of whatever I'm referring to, because everything is inside that specific moment in that series of candles in that fractal. And that sounds like a mouthful, but you'll understand exactly what I mean starting on Tuesday. When we start, I'll walk you through a traditional market analysis. You know, what I see from a traditional stance, what every trader would expect to see, and that may or may not align with what I think is going to occur in price. And it doesn't mean I'm going to be right all the time. So don't be tricked into thinking just because you've seen almost 100% accuracy for a day-by-day basis for as long as I've been going that I won't get it wrong. I will. It's absolutely going to happen. And I am, in fact, I'm looking forward to that because I want you to see that it's going to be very infrequent. And that's the benefit. So you're afraid of being wrong. Some of you out there that don't like me think I've been afraid to do that. I've not been afraid to do this. I just don't want to do it prior to now because it's easily copycatted. It's easily parroted for people that don't know me and they're running channels and running services. It's going to be very easy for them to repeat what I'm saying. If the audience that they have in front of them is not aware of me doing it for free out in front of everyone, and I'm accurate, it's going to make them look accurate. And that's the whole reason why I didn't want to do it. But this year, I'll give you my year. I don't care. Okay, I can give you a year and it still won't take any skin off my back. And it will hopefully help a lot of you in the course of doing it. So by traditional analysis or market analysis, that really entails a macro analysis, looking at the higher time frame, monthly, weekly, daily. What's the quarterly shift that we're presently in or about to transition out of? Seasonal tendencies, very long-term macro perspectives, where the market is really likely to be going on a higher time frame. That doesn't really impact a lot of the day trades that I do because I can be buying and selling in the same day on any given day. I could literally flip a quarter and say, okay, if it's heads, I can only be a buyer today. And then I could just make money doing buying in a down day. And these are all things I've done over the years to teach myself that, yes, there's an importance behind narrative and bias, but I can trade without a bias. You will learn how to do that this year. You do not need to be painted into this box that sometimes it makes you feel like when you're watching my videos, like this is the only way you can do it. No, there's lots of ways. There's lots of ways. Price is constantly moving. And you're going to see the plethora of types of setups that are available to you. And just because I'm not taking them doesn't mean that they're not valid. I'm not worrying about that one. I'm looking for something else. I'm looking for a different cherry to pick, if you will. You might like a plum, okay? You might like an apple. You might like an orange, okay? There's a different variety out there, and I'll show you how to bring your own personality to it and not be forced into any particular mold. So that way it feels more organic to you. It feels like it's your method, your model. And while I helped you, you've adopted it as your own. And it's really important to have that as a trader because copycat trading doesn't work unless you're doing signals, and you're allowing your trades to be copied, which is what I don't do. There's no real benefit to that if you're trying to learn how to trade. Now, if you have no interest in becoming a trader, but you want to be profitable and you found someone that's got a hot hand and it makes their signals available, then there's nothing wrong with that either. But I don't think anyone should be following someone's signals if your interest is in trying to learn how to do this, because the only thing you're going to do is develop codependency. And I think you'll see this year, I'm not going to develop or cultivate codependency. I'm teaching you independence. I want you all to be able to say at the end of the year, because of what you've taught me, because we walked through the charts live, a lot of the questions and misunderstandings and fear has been countered. And now I feel independent apart from you. And I feel like I can go forward without you. That's exactly what I'm aiming for. I'm not aiming for you got to keep coming to my channel for ad revenue. That's not what I'm doing. I'm showing you how you don't ever need to come back to my channel after this year. How's that work for you? How's that a marketing ploy for you? That's exactly what I want. I want you to be independent, and you should want that. Every trader should want that. Every trader should want that of the outcome and the experience with a mentor. I could form this into something where it makes you feel like you have to be with me forever, and I could fleece you for life, and you would be gladly paying me if I was going to do that. I don't want that. I want you to do this independent. You don't need to buy anybody else's stuff. You don't even need to buy my books. Okay? You won't need to do that. It's not an upsell. I'm not building the audience that way. I have more people buying my book. I'm going to prove that you won't even need to do that at the end of this year because you'll know exactly what to do. So there's no risk here. There's no risk. None. You have zero risk. You have all upside. And it's exciting because you're going to see something that no one else is able to do because they have a business, they have an image, they have to make revenue selling their stuff. I don't need to do that. And I love doing this. So you're going to have a market analysis given to you, and we will lean on that. And it's macro analysis, as I mentioned, the higher time frame stuff, seasonal tendencies. And then I will do a top-down analysis from monthly all the way down to a 15-minute time frame. So that way you know every time frame what I'm looking at, what I think is salient for that particular day. Nothing is going to be hidden from you. I will have nothing on another chart that you didn't see. Every single time frame, I'll walk you through it. Nothing is hidden from you. Absolutely 100% transparency. You will see and know everything that I observe and see and identify in every time frame. Every key level will be made mention of. That's a traditional market analysis. There's nothing inherently special about that. We all start there. It's useful. And where it's pertinent, I will show you how the retail will see it. The average trader, the hedge fund trader, what they see in price. And I will show you how to use what I teach is technical science, where it frames the narrative. How are the funds? Because that's why this business is what it is. They're not after your stop. They're not after Baby Pips Communities stops. They're not looking at Forex Factories, message boards, community stops. You're just following the same logic that these large funds use. That's just the way it is. So the market seeks that liquidity. And I'm going to teach you how to identify those arm wrestling matches where the fund managers positions. Wait a minute, Michael, you said fund manager? These people are the billionaires. Yeah, they are. But their trades aren't high accuracy. They're trying to make 15 to 25% a year. What some of you are trying to do in one morning session. They're not trying to do a whole lot. And they can weather being wrong a lot. Because number one, they're using other people's money. They know there's a sucker born every minute. Every time the market goes up, oh man, somebody made money today. I wish I could. Let me put some money in my 401k. Let me go in here and put my money in this fund over here. So there's always a new influx of suckers coming into that. This market is constantly bringing in people, and it's throwing people on their rear end through loss, fear, margin calls. The industry's constantly got a revolving door, but it's never going to run short of new people wanting to come in. Why? Because your jobs suck and they never pay enough. I don't care who you are. I got surgeons in here that make over $700,000 a year, and it ain't enough. Okay, come on. So there's always going to be greed. So this approach to trading is never, ever, ever, ever going to stop working, because these same mindsets that come in are indoctrinated to do the same stuff that these books talk about. And these arm wrestling matches, when their stop loss, where their premise about where the market's going to go based on a pattern or a moving average pointing some direction or another, when that fallacy is placed as an opposing view to what the actual market's going to do, I'm trying very hard not to use the word that shall not be named. The approach that I employ and how I use price action to predict a future outcome, when there's an arm wrestling match between the retail perspective on what price should do versus what it is that I do, what I've taught you and what I'm teaching you ongoing, those are perfect snapshots of exactly how you are going to want to trade. You're going to be looking for those perfect conditions. They're perfect because you have at that moment the highest probability for the market to go to where real large pools of liquidity are resting. How do you know baby pip stops are wherever they're at in a particular currency? You don't. You can speculate and say, well, it should be here, it should be there. But do you know for certain? No. But you know darn well above a daily high or a 4-hour high or an hourly high, funds have their orders sitting right above that. So the market will absolutely go there. It's going to go there, especially if there's a retail theory suggesting otherwise. So if you were asking me, if we were casually meeting at a bar or whatever, which is something I don't frequent, I don't go to a bar, but if we were to meet one evening and say, hey, how's it going? We just got to talking. What do you do for a living? What do you do? Blah, blah, blah. I basically look for weak-handed positions to fall into the lap as an arm wrestling match with smart money. And I capitalize on that. And that's how I reply. Person listen to that, they're not interested in trading. It suffices. Oh, wow, you sound like you really got it figured out. I don't need to go into a chart. I don't need to show them anything on my phone. It's just, oh, wow. Wow, okay, that makes sense. So you're looking for the dumb money. Exactly. But I try not to say dumb money because it's derogatory. I always use the word street money or retail. But ICT, if you're trading in an account with Thinkorswim, you're trading retail. That would be true. Anyone that's trading in a brokerage firm like that, that would absolutely be true. But I can't trade retail. So I can't submit myself to that. And I'm trying to also cause a paradigm shift in your thought process about what you think you know about the markets and how it really books. And then when you can look at the markets and see these arm wrestling matches between what the retail crowd, everybody learns the same things. Everybody is thinking the same thing. You got two moving averages, they've crossed, they're pointing up. It looks it's going to keep going up. And it's had a small little rally higher. And now it's consolidating, but slightly sloping down. Oh, everybody knows what that is. That's a bull flag. Not if we have just literally traded into a premium PD array and we're in a larger scale sell model. You're looking at a potential smart money reversal. But the retail crowd has no idea about what that is. They're expecting continuation because the moving average is pointing up. I started with moving averages, and it's helpful in the middle of the moves. At the end and at the beginning, they're useless. Absolutely useless. You'll get chopped up and beat up in those points and also when we're in consolidations. And that's part of why I will be doing a traditional technical analysis and market analysis, and then showing you technical science, which is building narrative. And then from that narrative, bias for the day and for the session. How do I do that? How do I arrive at a bias? I might be long-term in a buy model. It means I'm primarily looking for higher prices on a daily chart and weekly chart. But my narrative and bias for the session morning may be bearish. Well, wait a minute. Wouldn't that be low probability? No. No. Because if the conditions are correct, everything I'm looking for at the time that would allow me to come to that conclusion, you will know about them. That way you have real world experience with someone that's been doing it for a long time and behind the curtain view. You've already seen me prove to you daily I can do this. How many times did I call something and it not happen? Show me a MyFX book. No, I will call it live. Count how many times I got it wrong. Did it go exactly where I said it was going to go? That's proof. MyFX books, that can be faked. I cannot fake it in front of 250,000 people. They all see the same thing live. And when you watch me live over a chart, there will be a small delay between me talking and your computer or device receiving what it is I said. But once I say it, I can't edit it. It's going to arrive at your computer or your device eventually. It is what it is. And it won't matter because I'm going to tell you where I believe the market's going to go. You're not going to need a to the second update of what is that's going on. Because I already will frame out the day. I'll show you what I'm looking for, why it should do this, why it shouldn't do that. And it'll hopefully, this is my goal by doing this, it will disarm you. It'll relax you because you're all coming with this fevered concern that it's all going to stop working. I better start making money with it right now because Mike, he's giving it to everybody. They're going to change it. They're going to take my opportunity away because he's being so generous. And I don't want to cuss him out because I want to learn from him too. It's making it impossible for me if he keeps going on. No, relax. Relax. Trust me. Trust me. It's not going to change. Will you get it wrong sometimes? Absolutely. You will see me get it wrong. And it will be nothing in the grand scheme of the entire year. I want you to see me get it wrong. I absolutely want to see it happen. Because some of you are going to lose your friggin' minds. What? Oh my goodness. And you're going to wrestle with something. Feelings and emotions and concern, anxiety. Your hero got it wrong. And that's going to be good for you. That's a growing pain. And you'll see, it's nothing. It's a paper cut. Just leave it alone. It'll heal. But all this concern that things are going to change and it's going to be made impossible for you to be able to do it because I'm bringing all these other individuals into the mix. It doesn't change it. You have no idea how deep this market is. It's a lot of money in this marketplace. I could have millions of followers and it isn't going to change anything. The market's going to do what the market's going to do, period. So you'll be disarmed this year. You'll see that there's nothing you should have been worrying about. You should have just went through the process like I've told you to do this very way, and you would have learned sooner. But you'll understand by technical science aspect of what it is I do. And the reason I'm saying technical science is the guys over in Goldman Sachs, they made a remark one time. You don't have to complicate this stuff because they see everything I talk about. They see the things I teach. And it's a lot of moving parts. And because, they don't really make any decisions, they just follow a long-term model and hope it moves in their favor with somebody else's money. That idea allows them to be standoffish, snooty, snobberish. Like, hey, we don't need to do that. It's too much effort, too much technical science. It's just trading. It's not technical science. So when I heard that, and I was like, you know what? I'm going to take that and run with it. And it really is very similar to what you could call what it is I do and what my students do. It's technical science. See, when you look at an indicator and you're looking at moving averages and you're looking at all the things that everybody else knows about in books. Now, I want you to think about this, okay? This has nothing to do with the word that shall not be named. It's common sense. If everybody knows that if an 18-day moving average crosses over a 40-day moving average, and they're both sloping up, that's called stacking, okay, when they're both pointing in the same direction up, and then an indicator, like a slow stochastics, 14-period slow stochastics smooth by a 3%. If that is used as your oversold condition, and you see it cross over and start pointing up after being oversold, everybody that's ever read anything about books knows that that would classically be defined as what? That's a buy signal. Okay, everybody knows that. But pray tell, why is it that everybody isn't making millions of dollars with that? Exactly. It's more to it than that. There has to be something to ferret out what? The shit that doesn't work. Because there's so many indicators and so many variables and so many potential theories inside of retail logic. How does the market and how does the participants of that market determine which flavor of the market retail logic they're going to use for that day, for that market, for that time frame, for that session of that day in that time frame? You see how infinitely this is ludicrous. It's madness. And when I took a step back and looked at my own approach to doing this and seeing the results not being supportive at all, I was like, okay, there's a way to do this, but it's not by doing this, applying different things all the time, constantly evolving, thinking I'm evolving into a better version of a retail trader. But in fact, all I was doing was constantly adding more dirt and making the water even harder to see through. But you feel like you're doing something constructive. I'm going to show you the opposite, even with my own content, which is what it's been all the time. But because you see that mountainous volume of work that I've put on my YouTube channel, I ain't going through all those 900 and some videos. Good grief. Not that there's not, I don't even know how many videos there are, but I know I've made a lot of videos over the time of teaching. I want you to know what it looks like using a simple approach to what it is that I do, using that model from last year. I'm also going to teach you a variable in it. So that way, when we look at price action, what we're trying to do is ascertain what it is that the retail crowd is going to be likely expecting. You have to know what that is, not because we want to duplicate or replicate or mimic it. We have to know what they're likely to anticipate in price, because that crowd is most of the time inaccurate. They tend to be the losing crowd most times. Now, inside that community of traders, there are diamonds, traders that still find consistently profitable outcomes. But that logic, even those individuals use, is flawed. I'm not knocking profitability. I'm not knocking experience. I'm not knocking the accolades that they could show and lay it on the table and say, here's what I've done. Here's all the proof. Here's all the MyFX books. Here's all the track records. Here's all. I'm not arguing that those are facts. That's fine. I'm still arguing the fact that you're impressing upon anyone willing to listen to you and to the person in the mirror that that's the reason why the market did what it was doing. It has nothing to do with it. You're a good money manager. And that's commendable. Absolutely. But you're going to learn how to see price as it really is this year. And you're going to know what real jade is, because I'm going to show you what real jade is. See, you've seen me show you jade every single day. I placed real jade in your hands on Twitter, tweeting to you a specific candle on a specific day and pointing to another direction away from it. So you know what I'm expecting. Calling it out real time every single day. Every single day. It's boring, isn't it? You know what's going to happen. ICT is going to sign on to Twitter. He's going to talk about something in the marketplace. It's going to deliver in your charts, and you're like, man, this keeps happening. This keeps happening. This keeps happening. That's exactly what it will feel like for you at the end of this year. You won't need ICT on Twitter. I'm trying to make myself irrelevant. Again, how is that a marketing ploy? I want you to be done with me at the end of this year. Some of you, I don't want you to separate yourself from us. You do want me to separate you and I. You do. Because that's independence. That's exactly what I want all of my students to have. And I don't feel any heartbreak over that. That's exactly what I'm trying to teach you to be. I want that. That's the outcome I want. You want me to be glad handing with you continuously. And that's normal. But there's a point at which a trader says, all right, I want independence. I don't want to be tethered to this person or this model or this service, this product. I want to be able to walk the walk myself and know, yeah, I might get slapped around once in a while, but it's not going to take me out of the game. I know how to weather it. And I'm going to continue with this approach because I know it will deliver consistent potential profitability. That's what every trader wants. The confidence knowing that they will be okay on their own. And most of you right now don't have that. So I'm doing the best thing I can, and really, frankly, the last thing I could do, except for trade your accounts for you, put a trade copier out there. The navigation through price action, using just a couple things that basically you already know, and streamlining it. So that way you know this is all you have to worry about. But ICT, why aren't you looking at this time frame ahead of orb? If I'm not talking about it, I'm not using it. Think about it now. You're bringing everything. You're bringing the kitchen sink approach. Just because I've taught many things on that channel doesn't mean I'm bringing all of it to these live sessions. Some of you are going to be like, wow, this is really simple. Exactly. Exactly. And you would have discovered that had you done all of these things on your own. But you don't want to feel like you're wasting your time. And some of you are still going to be sitting in these live streams and disconnect, turn it off and say, this is wasting my time. And I want you to know, here right now, hear me. You will never make it as a trader because you're not able to subscribe to a point of view long enough to see if it's really worthwhile or not. I already know it works. I have students all around the world that are making real money with it. I don't need you to support it. I know it works. But I'm making it available to even you, the doubters, the cynics, the skeptics. So we will arrive at a narrative each day. What I think might pan out in terms of price action. And because of that narrative, I will subscribe to a bias for the day and for that particular live session, whether it be the morning session. Predominantly, they're going to be morning sessions. But throughout the year, I'm going to sprinkle in afternoon sessions. That way we're not just doing one-trick pony morning sessions. And some days, if I feel, that my family and my wife will be in support of the idea, I might do the morning and the afternoon session that day. But we'll take that on a day-by-day basis, and I'm not promising it, but it's likely to occur because I'm going to ask her, throughout the year if it's something really designed to do well, or maybe it's something I will show you how if maybe I get the morning session wrong. Okay, it's going to happen. I'm human. I'll say, okay, well, let's meet back again at 1:30, and we'll do the afternoon session and see how would I try to mitigate if I took a live trade which you won't see me pushing the button in, but you will see me outline where the market should go. This is a particular PD array. The market should go higher or lower from here. And this is where the market should not go to. When I say it should not go there, in your mind, when you're journaling after the fact, not pushing a button and putting a stop loss in there, but that's the equivalent thereof. And you'll see what I mean. I'll do a couple mock-ups in the first couple of weeks and show you what you should be doing in terms of post live stream. Everything you heard me talk about, what I did in my charts, you'll have my whole chart with the annotations, obviously, as I'm going throughout the day. But I don't know if I'll tweet it or if I'll post it on TradingView. I'll publish. Maybe that's what I'll start doing on TradingView. I'll publish end of day like a journal. Let me know. Give me a 1 in response to the tweet that shows this live stream or this podcast, or what is it called here? Twitter Space. But give me a number 1 if you would like me to use TradingView and publish my chart and with all my personal annotations and observations that I think are pertinent to that particular live session. And then I'll just publish it right to. So if you follow me on TradingView, you'll be able to just go to my profile. I've never done anything on TradingView like that, but I know you can publish things there. And I'll just treat that as this year's like journal. And anything noteworthy, I'll just dump it there. And that way you can see it. It'll stay there, and it's pretty much. I think it's easy to see it. I've seen other people doing it, but so I'll go through the analysis, traditional market analysis. Then I'll go through how I develop my own personal narrative in the morning, what things I'm utilizing. So by repetition, you'll see, oh, this is all it took to do that? Yeah. And then bias, why it should do this, go up, or why it should go down. And you'll see everything that you're doing that's complicating it. I'm not complicating this. I've never complicated it. It's just you're trying to read another language that you've never learned yet. But once you understand the language, you see that there's very little that's necessary or required for you to find setups that pay out. And then after we arrive at the bias within that narrative that I'm going to frame for you, we'll look for precision signatures. And what are they? Specific elements within time of day and specific PD arrays inside the PD array matrix. What is that? Well, it depends on what the market's presenting me, because not every run is going to have a breaker. Not every run is going to have a fair value gap. Eventually they will, but not in the beginning of the move. And you'll see, and you'll hear, and you'll understand this is what the market's presenting us right now. Right now, this is what you need to focus on. Does the market look to do this? Does it do that? And you'll see it, folks. You will see it, and it will come alive. The charts will start communicating much more information to you than what you already see now. It'll feel like the same way it feels when you look at a hindsight chart and you say, oh, if I just would have saw that real time. You're going to see me do that real time. You're going to see it. You've already seen enough of it. You've seen that through tweets. It's codified and time stamped. There's nothing being deleted. Okay, as much as I want to go back and delete some of these embarrassing typos, I don't delete anything. It's there. And it can't be argued. It was called beforehand, and it delivered to the tick. Daily, weekly. And that's what my subscribers have seen, my long-term students. They've seen years of that every single day using higher time frame charts. So don't be afraid or think that this doesn't fit me. As much as I want to use this information on ICT, I just simply cannot trade intraday charts. My life doesn't allow me to do this, and I'm struggling. What do? You study what I've taught in these live sessions and apply it to higher time frame charts. It's the same thing, folks. If I show you examples and I hide, I take away the time frame and I say, what do you see here? Do you see this, 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 this? You'll see it's the same thing because price is fractal. The same things it will do on a 1 minute chart, a 30-second chart. I said that right. 30 seconds. Every candle is 30 seconds in interval. It's the same thing applied in that time frame all the way up to a weekly and monthly, to a quarterly chart, to a yearly chart. It's the same thing. It's the same thing. Price is following the same characteristics of delivery, no matter what time frame you're using. And you're going to know. How do you know which time frame to use? I'm going to show you that. But I can't write a paragraph in a book or a chapter in a book. I can't do a video series and just do stale examples of it. And you get the real understanding of what it is to understand what it is I'm teaching you. I'm going to show you. I'm going to prove it to you. I'm going to lay it in your hands every single time we come together live. You will understand exactly what to do, what not to do, what to focus on, what not to focus on. What's the things I'm not supposed to focus on? Everything I'm not talking about. If I'm not mentioning it, it's not important. And I'm telling you, your face is going to ache because you're going to be smiling because it's like, this is so much easier than I thought it was. Yes. And you have delayed that gratification. You have, not me, you have. You haven't simply sat down and did the work of being in front of these charts when it's uncertain, it's scary. You might get it wrong. That's wonderful. That's opportunities for you to learn and grow. But you look at that as failure. That's not failure. How is it failure if you've never put a live trade on? You didn't take a loss there. In the same capacity, reversing it when it does something right in your favor, you can't look at that and call that success. You didn't make profits on that. So see what happens when you start doing that? You want to skew the results of your progress, and these milestones are hidden from you because you want to have a report card. Am I doing right? On my first day of school, I don't know how to write the alphabet. I don't know how to do simple arithmetic. I can't even write the number 3. But I should know how to figure out 6 times 8. I should know what the square root of 9 is on your first day. That's unrealistic expectations. And social media has cultivated that. Your expectations on yourself and however everyone else around you should view you is completely diametrically opposed to reality. And you're going to see there's nothing to worry about. You're going to lose. You're going to miss. You're going to do it right, but not do it good enough. That's all normal. That's all normal. There's nothing to be afraid of. There's a way to protect yourself in this. You still will lose money when you do it with a live account, but you absolutely do not listen to these influencers on YouTube tell you, if I could go back in time, I would go in there and I would never use a demo account. I would start with the smallest amount of money in trading. Swaggy, that's not good advice. I do not subscribe to that view. And I think if anybody was really trying to learn how to do this, that's the worst advice you can give anybody. That's the absolute stupidest thing to do. If you want to learn how to shoot a gun really well, practice very first time with live ammunition. You've never handled a gun before. Let's go out there to the gun range and let's work with an AR-15. Really? Really? Let's test the efficacy of parachutes with somebody else packing your chute. Suddenly you don't want to do that, do you? That's the equivalent of going out there and trying to learn how to trade with live money. I don't care if it's the smallest amount that your broker will allow you to do. You are building all of this expectation. Listen, we all know nobody's here. Nobody's in this industry. Nobody starts trading to look smart. Okay? Nobody joins this industry to stand out in the crowd, to be looked up only on the basis of being right as a trader. We came to this industry to make money. That's it. No other business. Now, everything else after that are bonuses. They're things that build up the reasons why and support. Oh, this is something. This is a derivative. of being successful as a trader. So go back to square one. You want to learn how to make money? I will show you how to make money. But you have to start by learning what these candles are going to do. And the way you learn that correctly is remove money.